Hello back. Thank you for coming back to our YouTube channel. Uh, Also remember, if you've not subscribed to our YouTube channel, make sure to hit that subscription button and like our videos, comment and share. Right, as we are trying to bring some educational content about this forex. So I'm going to take you through Gbpjpy. I will be taking through Gbpjpy from a higher time frame to see how I managed to catch some buys and some sells. So this is on a monthly time frame, right? This is on a monthly time frame, and on monthly time frame, we can clearly see that we are reacting from where? From this kind of a supply zone around that area. So after knowing that we are reacting from that supply zone, and the current price action we are having here, the trend, the market is what? It's on a bullish trend, right? Now let's come to the current price action where to see what kind of a trend we have. So clearly we can see that we're having some a break of structure around that area, and whereby this market is reacting from this demand zone after that break of structure, right? So where are we supposed to be targeting? We're supposed to be targeting all those highs around this area, but what is the market doing? So currently the market is reacting from this week over here on a monthly time frame, right? So this week here acted as a resistance, whereby this market, when mitigated that week, we're having that what? That sell from there. So moving on to the weekly time frame, we're going to see on how the market is doing what? It's reacting from there. So for the supply zone which caused that market to react is this black candle there, and you can see clearly that we mitigated that zone. So at around this area, we're going to see how we're going to approach this market. So over here, we're having this candle here, this weekly candle, where we have what? The high, which has not been taken out, and the low, which has not been taken out, right? But what do we have again? We have a break of structure here, right? And then that means if you have that break of structure, then this is what? Our swing low, our protected low, right? But we have this candle over here. We have this candle over here, whereby we have the high and the low, which has not been taken out. We have only some kind of a 3 weeks candle inside the range of this, right? So all these candles are, we call them what? Inside bar candles, whereby they have not managed even to take out the liquidity, the buy side liquidity and the sell side liquidity, right? But we are not going to stop to trade because this market has not managed to catch that liquidity and this liquidity below that area. So what are we going to do? We are going to look what is going on inside the range of these candles, the inside bar candles, right? Now let's zoom and see what is going on. All right. So around this area, we can see that we took out that weekly high, right? And remember, the rule is if we take the high, we target the low, and you can see clearly the low was taken out. The low was taken out, right? The low was taken out, right? And then the market started to try to push going up. So currently, where are we? We have taken out another weekly high, right? And we have managed also to take out what? This low here. So after taking out this low, we swept also this low and this low. So what can you conclude? The market is trying to do what? Having some push going up. Now let's come to daily time frame, because On a weekly time frame, we can see that this week candle has managed to do what? To take out this high and this low and this high. But we're having this pending buy side liquidity and sell side liquidity. So let's come to the daily time frame. On the daily time frame, what do we have here? Right, on the daily time frame, we having some good movement at around this area. Clearly at around this area, what can we see? Right, we took out this sell side liquidity around there, and then the market had that reversal. So after taking out that low, what does that mean? After taking out that low, market closed inside the range of this, and then we can see the candle of yesterday, Thursday, it had a buy from around this level. So that means on a lower time frame, like 1 hour there, we can spot what? A demand, which made this market to have what? That buy. But remember this, on 1 hour, on a daily time frame, we having what? We having this, let me use other lines. I don't want to use this. I don't want to use this. Let me use this. So on daily time frame, where did the yesterday's candle went up to? So we're having that candle, the high of that candle of Wednesday, and we're having this candle here of Monday. So what do we have here? At around this level, we have what? We have this imbalance at around here. So the market is currently inside this imbalance, right? The market is currently inside this imbalance, right? So from there, if market mitigated that imbalance, you do what? You go to the next time frame, the four hours, right? We have seen that the market is what? It's inside the range of what? It's inside this imbalance, a daily what? Imbalance. But coming to this area here, what else can we see? We can see that we are having what? A break of structure at around that level. Then we having what? A change of character at around this area, right? And on top of that, we having some sort of like a resistance level at around this area, right? So if I turn on the line chart, you can see that the kind of resistance I'm talking about from this area to that area. So this is the resistance I'm talking about. From that area, we had this resistance whereby we broke above that zone, we had a retest, and again we have broken that support, turning it to a resistance, and then we have come back to retest that resistance. Now we are expecting market to do what? To have a drop, Now, after the mitigation of this zone, now of this resistance, come to this area. Look at this 4-hour candle, which had this beautiful buying momentum, right? So you do what? You mark the high and you mark the low of it. Let me remove this so we can avoid what? The confusions of these lines, right? Like that. So we have taken out the high. We are supposed to be targeting what? The low, the low. So what you should do, you come pick your gun box, mark the high of that 4-hour candle, and mark the low of it. The middle line is what? Your 50%, your 50%. You mark it the 50%, that. Then you can remove that line. So this red line around this area, this is your midpoint of that candle, the 50% of that 4-hour candle, right? Also, guys, remember also to do what? To like, share, and what? Subscribe if you have not subscribed. Make sure to do that, right? As we are continuing doing this analysis. Right, let's continue. So We have taken out that buy side liquidity. We are targeting this sell side liquidity, right? And you can see the kind of reaction we're having at the 50%. Now let's see if how could have managed to catch these buys, I mean these sells from that resistance using what? The 4 hours. Let's go to 15 minutes. 15 minutes or the 30 minutes, right? We will be going to that. So after taking out this 4-hourly high around this area, we need to look for, at least we need to look for an order block or a supply zone to have what? To have a sell from that area. So we can clearly say that we have what? Liquidity sweep around that area. And then we having what? A change of character at around that area. Then the supply zone is this candle. So this is the area where I took that sell from. I took my sell from that area. Stop loss you place around that area, right? You took that sell from that area. Then where are you targeting? It's either you target the 50%, right? So it's up to you. But for me, I do recommend you target the 50% first, you set into break even, then the running positions, you target what? The full range, the buy side liquidity, right? Because at sometimes market can reverse at the 50% area, right? Now, let's come back. You can see that the kind of a reaction after that, after the mitigation of that resistance area there, these were the confirmation entry you could have used. You could have had a sell from that area, targeting the 50%, holding the rest to the full take profit, right? Now let's go back to our daily time frame. The 4 hours. On the 4 hours, let's see what is going on. And you can see after this, after you've taken that sell, you can see the kind of the movement we're having at around that area. Okay, so that is the first entry. You've taken that area, right? Now let's come to this area. At around this area, the 50%, what do we have? When the market approached the 50%, when market approached the 50%, we had what? The sweep of this lows, of that low by this candle. This candle took out this low and closed what? Inside the range of this candle, right? So what happened here? So we are supposed to be having a buy, targeting what? This high. And also you can also target what? You can also target these highs here as what? Buy side. Buy side liquidity, yeah, right? So after taking out that low, you're supposed to be going to a lower time frame, taking what? A buy from a certain zone at around that level. So you can even go to the 30 minutes, spot that zone, take what? The trade from that area. And clearly we can see that the zone is what? The zone is here. This black candle here, it's where you could have targeted what? To take your buys from. But you should be keeping in mind that the general direction of this market is what? Bearish, because we are reacting from where? From a resistance level. We are reacting from a resistance level. Now come to this. Let's shift 15 minutes, see if yeah, on the 15 minutes for the refinement from the 30 minutes, on the 15 minutes you could have even refined it to that candle, right? So you could have even refined to that candle, take a position there from that area. You target what? That side liquidity, this liquidity around that level. And that's how you could have managed to do what? To catch this beautiful risk reward ratio of 5.67, right? Now let's come to this point here to see if on how you could have gotten this reversal of these sales after taking out this liquidity. Now have a look at this area. We had this change of character here where the market mitigated, activated those cells. So we're expecting these lows to be taken out so that we can have what? A break of structure, right? So we have a break of structure, and where is the supply zone? Our supply zone is supposed to be this candle around this area. And you can see clearly market what? Did what? Activated that supply zone by taking out what? This liquidity levels where you have been targeted, where these liquidity levels you targeted them when you had what? You had this buy going up, right? Targeting these buy side liquidities around that area to this supply zone. So when the market mitigated that supply zone, where what should where could you have been taking that sell from when market mitigated that supply zone? This is the candle whereby you could have taken your trades from. So for the sells, you could have taken from this area. Stop loss just a little bit to that zone. And where could you have been targeting? So you need to target where? Remember, your target is supposed to be this zone, right? So that's how you could have managed to do what? To trade GBP, JPY yesterday and today, right? On Friday, yesterday on 30th 10 2025, and today on the 31st 10 2025. Thank you guys, and make sure to subscribe to our YouTube channel, and also make sure to keep on following us and turn that ring bell on so that you can get notified when we upload what? Our next video. Thank you.